All right, we are coming down to the wire. This is going to be some cleanup items. Then I'll do a review video um, after Thanksgiving. So next week we won't have anything, and then we'll have a review video, and then we'll be into finals week. So time to get the projects kind of finalized, or at least start working on that. And a couple people turned them in just for review, which again is an option. Let's kind of jump in what we're going to talk about. So tonight I want to talk about just kind of some of the cleanup items. There's other things that people may or may not be driven to. The big thing is, you need to invest in your future, and just straight saving, putting it in the bank. I think I've tried to make that clear. I know it makes a lot of people nervous to do other things with their money other than just save it, but I think I've tried to drive home the point that inflation will just eat that up, and you've got to do a little something more, especially when you're younger, because you've got the time on your hands, time value of money, and you've also got time to rebound through any kind of volatility. But you do need to be disciplined and not panic sell or do something like that. But anyway, there's some other things in addition to the stock market that we've talked about. We've talked about, obviously, the stock market, which obviously is typically a component of most people's investment program. But there's other things, gold and silver, obviously a lot of marketing put towards that. A lot of fear, maybe not so much with the younger generations. Perhaps crypto may be the new kind of gold and silver for the younger generation, and I think that may affect the price of gold and silver, that the desirability may go down a bit with future generations. But who knows? Collectibles, other things you can have, perhaps gun collections, jewels, whatever, special unique items that may have some sort of value based upon scarcity. Speculative stocks, I don't put this in with the regular investments. The speculation and investing are kind of two different things. Yeah, I'd be lying to you if I told you I didn't speculate sometimes, but that's a portion of your money available, not all of your money. Crypto and real estate. And so again, the deal is you need to come up with something that's not only going to give you a means to save money, but achieve a rate that's higher than inflation. So here's a chart that's kind of interesting that I'll just start out with. Especially, people are drawn to gold, and gold does do pretty well sometimes, but in comparison, not to the regular market. So this is just the S&P 500 versus gold prices. There's some volatility. Sometimes gold can act as a hedge, meaning when the market goes up or down, gold should go the other direction. But because gold is used as a industrial metal, it's got whatever exceptional properties, special properties for transmitting electricity with no loss and things like that. It is used, and so when the market goes down, often the price of gold will be correlated to that, because the demand for gold can go down. And then another issue with gold, well, there's two. One is that it can be mined. So if gold prices really go up, the supply can go up. There's marginal gold mines that are out there, and if the price goes up too much, some of those gold mines become profitable, or people explore more, and they can find more. And so it's not like dollars where they can just print them easily, but they can get more gold. And then the main problem with gold right now is it's almost predatory. All these different gold folks that are advertising on podcasts, and then the older generations all over the cable news, and some people just are dominated by that cable news, and they just sit there and it's nothing but big pharma and gold. And it's not as if these people are buying gold at the spot price. The spot price is what gold's trading for on a particular day. So if you go down and let's say you wanted to buy gold, and in Alaska you're kind of in an unusual situation because there is gold mining taking place, and there's assay offices, and you could go down to whatever it escapes my mind, place down there on Arctic, and you can walk in there and buy gold, and you can get it for, if you're just looking at raw gold, you can buy it at spot plus a small percentage. That's Oxford Assay is the name that was escaping me. Anyway, this isn't a pitch for them, but I'm just saying you can buy gold at nearly spot, or what spot is, and you're paying a slight premium above that because, hey, they need a little something for the effort. But if you're buying gold through some, thing that's advertised heavily online, who is paying for that advertisement? Oh, they're selling the gold anywhere near spot, and yet they've got this massive sponsorship program. No, somebody's got to pay that bill. So unfortunately, a lot of these people are paying way more for their gold than they should, and so they're paying a super premium. And so gold not only has to go up, but it has to go up significantly before they're even breaking even. So. And then my other problem with gold is the whole survival bit just doesn't make sense to me. If things go to absolute whatever, the apocalypse, and there might be a period where gold, could be traded. You pull up to the gas station, you give the guy some portion of gold to get your gas. I think that's going to last about 2 to 3 days if we're in that scenario. It'll be surpassed in a few days by the person with the gun saying, I want all of your gold. It's just in that sort of civilization, the breakdown where dollars are no longer useful, but gold is useful, but guns haven't quite taken over. It's just absolute, whatever that old Mel Gibson movie, Road Warrior kind of tactics start breaking out. I don't want to be there in that situation, and I don't think I'm going to be rolling around in gold at that time. Now this one gets a little more controversial because now we introduce crypto, and you go, wow, why am I doing anything but that? So Facebook, Amazon, Netflix, Google. So we're looking at some really high flyers: bonds, gold, dollar, S&P 500. So the S&P that looked like a star before on the previous chart, that black line, now is looking pretty tame. And then these other ones that are a little more volatile. And then Bitcoin's off the chart. But Bitcoin, there's a lot more to this up and down. It is definitely a roller coaster. So, and this is not the time to be jumping in. Bitcoin goes in a cycle, and it's not at its high yet by any stretch, but to be jumping in now would be definitely a gut check. Part of the problem, though, with this inflation, the money supply, you see, it's a little erratic, and then all of a sudden, boom, COVID happens, and they lost their minds. So, yeah, things are going to happen to the economy when you do this. And that's what happened. Collectibles. So, I guarantee you people can make money. Somebody might, but you get into this sort of thing, and people even talk about this in terms of crypto. The old tulip thing from way back in the Netherlands, and the Dutch with their tulips, and there was a point in time where the price of those things, way back when, we're talking hundreds of years ago, went way up, and then it fell down, and if people put value in a scarce item, scarcity is the key, and that's why with gold or some of the other things, it is value because you can mine it, but there's just not that much of it around, even if you do mine it. And then you get something like crypto. The thing with Bitcoin is that there's limited supply. 21 million coins is all that can ever be printed. So it was designed to be limited. But the problem with crypto is, what's crypto worth? Only what other people say it's worth. Which, when you get right down to it, that's the truth with any item, any commodity. But somebody needs to value it for it to be up there. Yeah. So I kind of went through this whole thing with rugs, handmade Persian rugs, Iranian for the most part, Persia, Iran. Anyway, and I had some, I still have a few high dollar kind of rugs, handmade, very skillful, and again, that sort of attention to detail, that sort of just patience to create one of those makes them a scarce item. And I had a number of these when I was in Turkey, and I took them back to the States, and I was able to get them in Turkey for, well, I didn't even buy these ones. They were from a friend of mine, a dealer over there, and they were worth about $300 was what he would have sold them to me for. They weren't super high dollar ones, and they were worth about $1,500 a piece, back in the East Coast in New Jersey. But nobody was buying mine for that price. They would walk into, this gentleman's shop and look at all the different rugs and then perhaps settle on one. And so this guy had a storefront, he had inventory, he had everything. Me, what am I going to do? I'm going to sell those rugs on eBay or Marketplace, and I'm not going to get, people aren't going on there to pay full price. So I just didn't see the value of it. And that's really when I started getting into stocks and real estate, because I'm like, all my friends, fellow people who were in the military with all these other officers were buying all this stuff. I'm like, this is not an investment strategy. This is you going out and drinking beers with a rug merchant and thinking you're making $1 million. It's not. I don't see how that's going to get there. But anyway, the other problem with collectibles is, the storage and security. And then the counterfeits, too. I bought some gems in Afghanistan when I was there, and yeah, most of them were fake. I knew what they were. I mean, I didn't pay a whole lot for them, but sure enough, just because you're in the right place at the right time doesn't mean that they won't sell you glass, because you'll never see them again. And yeah. Anyway, speculative stocks, again, Wolf of Wall Street, some of these other things, the pump and dump, that all happens. And they really prey upon the non-SEC. Somebody like Elon Musk, if he gets up there, and he has gotten in trouble a little bit, but if he makes some outrageous claim about Tesla or this or that, and it influences the stock price, shareholders can sue him. I mean, if they put forward, misleading information regarding the strength of the company, you can go to jail, and it can happen. I mean, now that's because it's regulated by the Securities and Exchange Commission, the SEC. The penny stocks are not. But then also on the internet, it's a Wild West, and it's just somebody can make some random comment or pump some crypto especially, and then they do a rug pull. They jump out and you're left hanging. So anytime it's a get rich quick, I mean, there are certain stocks that can do super well, but for the most point, look at the fundamentals. Make sure it makes sense. Make sure that it has some sort of track record. And futures and options, we didn't talk too much about that. Futures are they're too dangerous for me. I just don't do it. What you do in a futures contract is you agree on a price at some point in the future. And the way this is used in industry or whatever, let's say you're an airline and you want to sell your tickets for, not this Thanksgiving, but next Thanksgiving. You already have those on the books. We have no idea what fuel prices are going to be. You're hoping they're going to be lower or maybe the same or whatever, but you need to set your prices to make yourself competitive. So you need to maybe try and take that element out of the situation. So what they'll do is they'll say, hey, we're going to buy $1 million of jet fuel at $5 a gallon for November 2025 delivery. And somebody on the other side, maybe through the Chicago Board of Trade or one of these, trading places that does futures trading, some investor will pick up that deal. And what he'll say is, yeah, let's say jet fuel, I don't even know what it's going for, but let's say it's going for $4.25 right now. And these guys are offering to pay $5 a gallon. So, prices stay the same, 75% profit per gallon for delivery in November 2025. And so the person with that futures contract, one way or another, they got to deliver that jet fuel at that price. And so if jet fuel goes up to $6 a gallon, they still got to deliver, that million gallons or whatever it was they agreed to of fuel at that price. So it can go very, very well for them or very, very poorly. And, but anyway, the hedge fund type folks, they will often get involved in this. And options kind of work the same way, but an option has got a key definitional difference. It's the right, but not the responsibility. So you could take this contract, but you don't have to deliver. You can deliver it at that price, but you don't have to deliver it at that price. And you pay a premium. So if you, let's say your neighbor's got a house and you really want to buy that property, but you don't have the money just yet. Let's say the house is worth $500,000 and you don't want them to put it on the market just yet. So you draw up a contract and you say, I want to buy the house for $500,000. What do you come up with the price? But let's say it's the market price today is $500,000. I want the option to buy your house for $500,000 1 year from now. And in consideration for that, I will give you, $4,000, $5,000, something like that, just to hold it at that price. Now, a year from now, if real estate prices have gone down or you're not in a financial situation where you want to purchase that house, you can just say, yeah, I'm not doing it. I'm not buying the house. But obviously the person gets to keep that $4,000 or $5,000, whatever you gave them consideration. So you had the right to buy it at $500,000, but you didn't have the responsibility to follow through with it. And so slightly different, but options and futures a bit beyond personal finance. We're getting into more things. Bitcoin, whatever. I can't help but be focused on it just because it's exploding right now. But wild chart, but semi-predictable. And again, there's Bitcoin, that's kind of the big daddy of them, but then there's all this altcoin and shrapnel and all this stuff that is just garbage. And then there's, Ethereum, Solana stuff that's kind of in between, but there's the Bitcoin purist. Bitcoin has got that $21 million coin limit, and it's got some other things out there that are tested in code, and it's a lot of bad things can't happen at Bitcoin that can happen in some of the other coins where it's not quite as well known. The code is an open source. The investors are a smaller pool. Anyway, but the potential for this stuff, it could upend, disrupt the entire financial services. There's a lot of, the institutions have now begun to embrace it. Actually, they've more than begun. They have embraced it. But for a while there, they were opposed to it, which was dangerous because, it was still small enough to where it could be squished. Now it's so large, and so many of the big Wall Street folks are invested in it that now they've got skin in the game and want to preserve it just like everybody else. So we'll see. Will it replace the gold? I think generationally, I don't think the younger generations are going to be the gold bug kind of folks. I think they may be driven to it. So we'll see. This is what I'm saying. So halving happens every 4 years. And halving just means that the return for these people doing those situations goes down by half. And so when the halving happens, post-halving, the price spikes. And about 6 months before, at least, I mean, these are different cycles, and they look so much alike. Anyway, so 6 months before was a lot like September of last year, so a year ago September, and then 18 months after that will be basically October, a year from now. The problem now is that the banana zone has already kind of started, and if you jump in now, there's a whole unique vocabulary that's kind of spun up in addition to crypto, and FOMO has always been there. Nobody's really talked about so much with stocks or whatever, but FOMO is the fear of missing out, where the price is screaming up, and fear of missing out. You're like, oh, I got to get in now, and something happens with the cycle and it doesn't go up anymore. It's already at $90,000. It's gonna go, but who knows where it's gonna stop. It'd be very scary to jump in right now with large amounts of money. Not so scary 6 months before. You could have got in for about 25,000 back 6 months before the halving. But anyway, we'll see. This cycle should repeat. What's different this time is that all the institutions are involved, and they're not as irrational as the retail investors. And so this whole dip thing, they may end up with a super cycle what gets up to a certain point and then just starts to go sideways and doesn't have another large dip. One thing that is certain, though, is between now and wherever it ends up, there will be, they're saying about 10% dips between now and the end of next year. So it's even though it's on a positive trajectory, there will be some wildness to it. Real estate, fantastic, lot less. Well, if the stock market's not right for you, and crypto certainly isn't right for you, then real estate may be your thing. Now, you can have a combination of these things. That's what I've done. Tried to make money in the market and then buy real estate. But anyway, you can get in super volatile real estate markets. If you are into speculation and on the riskier side, you can buy riskier real estate. There's certain markets that are, volatile as all whatever. Miami and maybe places in Arizona and a few other places where the prices just have these massive swings. But for the most part, and I would say most of Alaska is like this, it is a lot more stable. It's a tangible asset. There's no pump and dump so much, although there are scams up here. There's always the level of corruption for people saying, oh, the bridge to Point Mac's going to go in, or the state capitol is going to be relocated to Willow, or some of those other things that cause, irrational spikes. That can happen. But for the most part, it's a good tangible asset, relatively safe, not liquid. Real estate transactions, difficult. Just take some time, and there's not that many people interested in buying, and certainly not super quick. But it's going to go up in price as the rest of the things inflate. And then my favorite is that, you can enjoy it. Looking at a huge balance on your bank balances, whatever, but actually being able to have a nice place to live. Now, the other problem, though, if your primary investment is just your house, you can't really sell it without greatly diminishing your lifestyle. So anyway, maybe income property on the side or something rather than your primary residence when you get to that point. Another thing I just wanted to touch on is kind of, we're sort of at a time, and we'll see what happens. There's lots of opportunities out there for sort of side hustles where people have, or maybe they start out at one phase in their career, and then eventually they decide, they want to work on their own. And it's pretty gratifying if you can make money with your own business, because obviously you work harder than you will for somebody else, but also somebody else is only going to pay you just a little bit less than you're worth. They'll never pay you actually what you're worth, because the reason they're employing you is because you're making more money for them than what you're costing them. I mean, that's the whole thing. So if you do own a business, certain things you can do to greatly help yourself out. Number one, don't do the sole proprietorship. Sole proprietorship is dead easy. It's just, you open up Bob's Plumbing or whatever. It doesn't take any real effort. You get a business license and, no corporate structure, and your sole proprietorship. The problem with all that is that the liability is unlimited. So let's say you're this plumber guy and you have a ladder or you have something on top of your truck. It falls off in the glen, causes some horrific wreck. You're getting sued by everybody. And because your business is a sole proprietorship, your personal assets are at risk too. They're coming after you, they're coming after your house, they're coming after everything. If you were incorporated in any form of a corporation, your business assets and your personal assets are separate things. If you're whatever Bob's LLC Plumbing, that ladder comes off, yeah, they can go after that business, but only for the assets that are involved in that business. They can't come after your house typically and all the rest of it. If you do something super negligent, you might find a judge that pierces the corporate veil of whatever and goes over the top. But in most cases, your liability will be limited to the assets involved. Also, taxation. You're taxed as an individual. Makes it simple, but it also doesn't give you a lot of options, And when politicians say, oh, we're going after the millionaires, well, you may not be making $1 million, but you may have some large amounts of money transferring around through your business that are all attributed to you. So all of a sudden you start falling into some of these tax situations that you may not want to be in. So, and then lastly, if you have children or you want to sell the business or something like that, well, selling it wouldn't be that difficult, but the real problem is succession. If you happen to die somewhere along the way, which we all will, your business died with you. It was owned by you. It was sole proprietorship. The assets are there. I guess it'll be transferred to somebody in the will, but it's a mess. If you would have had a corporation, you died, but the corporation didn't. And so the corporation is still an entity that can be transferred, intact. So a lot easier. Partnerships, I'm not a big fan. You see them sometimes in law firms and stuff, but it's kind of like a marriage, but without the love. I mean, obviously marriage is, a 50% end divorce. Imagine if there was no sort of emotional bond. I just don't see how partnerships work. I don't, nobody's going to put out this equal effort, and there's just not for me. Corporations. So there's different types of corporations. You can have public corporations where there's publicly traded shares. You can have private corporations where there's a limited number of shareholders. But the liability of the corporation is what's good. And it's a legal entity. It has personhood. It can go to court as a person, basically. So there's different types of corporations. So S-corps. I had one of these. It was a nightmare. I unwound it and went back just down to an LLC. Taxed as a partnership. But the liability protection is kind of what I was after. and avoid personal lawsuits. Yeah. I had a campground for a while. People with, four-wheelers and stuff, kids, whatever. Bad things are going to happen. I'm going to get sued. I'm going to lose everything. So you don't want that to happen. S Corp. Yep. Oh, I'm sorry. Sole proprietor. I'm misreading the slide. 3/4 of all U.S. companies, not because they're the best, but because they're the easiest and people are lazy. Here's the corporations. So huge sole proprietorship, very small, but in terms of assets, in terms of the size, these are just the numbers, but the actual wealth probably dwarfs that. So this is the numbers of entities, but if you're to look at the assets, it would probably be skewed because you don't see big companies as sole proprietorships. They'll be probably some form of corporation. Advantages. Yeah, little government regulation. Can be solved easily, perhaps too easily. Unlimited liability. Scarce external forward. Yeah, because it's a sort of a fragile type thing. Success tied to the owner. Everybody's just working. Nobody has skin in the game. Nobody has shares other than the owner. And you're paying at your personal tax rate. Partnership. Yeah, not too many differences. Limited versus general partnership. Yeah, so if you're limited, that means your liability is limited. But it also means that you can only have a limited role. You can't be involved in management and then claim limited partnership. I worked for a limited partner. It was pretty funny. These stupid dentists had bought a pizza place, and this was when I was in college, high school, whatever, delivering pizzas, and that place was run like it was fun. We had a great time, but there was like zero management because they were all limited partners. And although they knew we were abusing everything and just sitting around eating pizza the whole day, they couldn't say a whole lot because they were limited partners. It was a strange place to work. But if you say, hey, quit doing that, now all of a sudden you've become a full partner and you whatever. You don't see them too often. I've been in limited partnerships in terms of investing, meaning it was a real estate deal that ended up losing a ton of money, but I was a limited partner. I actually didn't lose any money. I got out once I knew things were going south. But if I would have stayed in and if I would have been a general partner, I'd invested like $10,000, but I could have been out like 50 grand by the time the whole thing was done. But first off, I was a limited partner, so all I could have lost was the amount of money I had invested. But if I would have been a general partner, I could have lost unlimited amounts. Yep, easy to organize, swift decision making, few regulations, so just not something I'd be involved in. Unlimited liability, so it's still traceable back to two individuals. There's no corporation, there's no personhood and part of the entity. Yeah, difficult to sell partnership interest. You have to convince somebody that they want to be involved in this other person where you're responsible for their actions. Nah. They do it a lot of times for taxes. There's different things. But again, getting beyond the scope of personal finance. Corporations. So, yeah, a corporation can do all these things. Sue and be sued in court. Enter into contracts. Own, transfer property. So, majority of all U.S. sales and income. So if you're doing anything at all, and again, you don't want to be necessarily a C corporation, just an LLC, a limited liability company that has a corporate process. You don't have to have stocks and dividends and all this stuff. This is representative of a C corporation. creating a corporation, funny enough, is way easier than you'd think. You can get all sorts of lawyers and make it elaborate, or you can just go online to the Alaska website, Commerce website, pay $250 and be set up. Domestic, foreign, alien, we're not going to go there. So private corporation, there's certain things I'd love to be involved in. I'd love to have stock in say SpaceX. You can't. It's a privately held corporation. It may go public at a certain point where it does an IPO, initial public offering, but it hasn't gone public yet. That will be something to look for when it happens. DJI, the people who make the drones, they, great products, industry leader, but again, you can't buy stock in DJI. It's a private corporation. If they were to go public, that would also be a good one. So, anyway, when they do an initial public offering, it can be exciting. The problem is it's not necessarily the fairest process. For example, when SpaceX goes public, I think they're maybe go public this next year. The people who get it at the initial share offering will be insiders. For retail investors, we're going to be buying on the secondary market. You can still buy it that day, but you're buying stock that is already not quite at the initial price. It could be higher, could be lower. What they'll do is they'll try and set the stock price at what they think the value of the company is, and then the market will kind of have its say, and it will go up or down. And anyway, interesting. Public corporations, yep. Non-profits and quasi-public. So, don't be confused. Sometimes, too, you'll hear people talk about, working for a non-profit. Non-profits, people can make tons of money working for non-profits. I've started a non-profit. The IRS and I didn't agree on the thing, so it closed quite quickly. But all I did was do all the initial filings and stuff. But people can get paid salaries of $1 million working for nonprofits. It can be very deceptive. People think, it's all charitable work. No, maybe the work is focused on doing something. Maybe the shareholders don't get a profit, but the employees can be quite well compensated. Elements of a corporation, we're not going to touch on this. Preferred stock, we're not going to touch on this. That's beyond what you would be setting up. Same with common stock. Advantages corporation, limited liability, perpetual life, expansion potential, the ability to raise capital. That's why corporations exist. They can sell stock and generate money. Double taxation. So corporation, if you own a corporation, well, the corporation makes money and has to file a tax return, and this is taxed, and then it provides those profits to you as the owner of the corporation, and now you have personal income from that corporation. You're taxed again. So expensive to form, depends. A simple corporation, like I say, the drop-down menu is there. You could do a C corporation or a LLC or whatever. They're all the same price. Now, if you want to do all this organization where you've got boards of directors and all the rest of that, that's going to get expensive. But just to form a corporation is not expensive. Joint ventures, S-corps. So S-corp is to eliminate that double taxation. I had a lady who was giving me this advice, but she unfortunately passed away. Left me with a big problem because I was kind of in over my head. I had an S-corp established, but whatever, she wasn't as good as she portrayed herself to be, and it all kind of fell apart. But whatever, recovered, transferred the S-corp back to just a straight LLC, and it was made more sense. LLC. Best blend of characteristics. So if you are going to do something, let's say you're going to open up some sort of side business. I've put all these different options out here, and the main takeaway from this would be very quickly, get away from the sole proprietorship and migrate to some sort of limited liability company, and you will have much better characteristics for what you're trying to get done. All right, so that was just those aspects. Now, the final thing we're going to cover here is just real estate purchase process. Like I've mentioned, in most cases, real estate should be a component of your financial portfolio. To be a renter your entire life, there may be certain situations that might drive you to that, but you are going to be disadvantaged from a tax perspective. The tax benefits, the ones that exist, are really the best tax treatment is for homeowners, and then there's a number of other reasons. But the ability to escape capital gains tax by selling your primary residence, the ability to get cheap financing is has to do with home ownership. The deductibility of interest is on tax, although that may change. They're talking about making personal interest deductible again. But anyway, real estate is probably your largest transaction that will occur in your life and is pretty involved. So I'll just go through a few things. I do have it's long lapsed, but a real estate license in Alaska. Sold a home or two, but it's not the business for me. But some people make quite a bit of money. Some, meaning the upper 3 to 5% are absolutely killing it, and the other 95% are just paying fees and kind of struggling. There's a few real estate agents that really do well, and the other ones just kind of also ran. But the big deal about getting involved in real estate is you want one of those top performers because they've got the volume, they've got the access to all the homes. But these people, time is money, and they're only going to deal with serious people. And if you don't have a pre-approval, if you don't know what you can afford, you're not a serious person. So you would first step in purchasing a home might be to contact the agent, but only to find out which mortgage broker they would they prefer to deal with, and a point of contact or something like that. But getting that pre-approval, getting that credit out of the way, knowing what you can afford, and having that letter, that pre-approval letter, is huge. You'll have to pay for a credit check. Used to be $50, probably still right in that ballpark. Whatever, you're going to have to pay it anyway at some point when you go to get a loan, so pay for it now and it's out of the way. Real estate, the actual location. It's all about where that property is, because it's not moving. What's the neighborhood like? What's the commute like? What's the characteristics like? I like to buy things on the edges. Pretty much everything I own has got some sort of waterfront. A golf course would be fine as well. Green space would be fine as long as it's going to stay that way. If it's a state or national park or forest land. You don't want just open vacant land, because that's probably going to get filled in by some developer and probably diminish the value of your property. Licensee, yeah, again, Alaska's full of scandals, so they tend to call them licensee up here legally, because people, somebody ripped off somebody and their agency was challenged, so they couldn't use that anymore. Online services, Zillow, things like that, not super accurate in Alaska. The market's just not that big. We're not a full disclosure state, meaning that the numbers of real estate transactions don't have to go on to all the financial, government sites like they do in other states. So it makes it difficult for those people to work. Big picture is at some point in the future, Redfin and some of these discount real estate people may get a foothold in the market, but for right now, not so much. You're paying a 6% commission to the seller pays that. It's not set by law, but it's set when you sign that contract saying you're going to pay 6%. So they can't say, oh, it's required, but yeah, it's pretty much required. So little nuances in the thing. But anyway, 6% can be a fair amount of money, but those people's expenses are pretty high. You know, their office space, their MLS fees, multiple listing service fees, and the rest of it. So it's not as lucrative as you would think. You have to do some volume to make some money at it. But
unknown caller.
We'll see what happens. Okay. Next. So disclosure review. If there's something wrong with the home, and especially if you've got an agent involved, you need to disclose what's wrong with it. If you as the seller and you're doing some for sale by owner, which is generally not the way to go, but if you're doing for sale by owner and you neglect to tell them something, if it's truly fraudulent, yeah, you'll probably be on the hook over it. But if it's just something that you overlooked, you're an owner. You're not somebody in the industry who should have known better. If you're an agent and that were to happen, you're going to go to court and you're going to lose because you're a professional. You should have known better. So it can be difficult, but you have to disclose any defects with the property. Homeowners associations too. You have to tell what the fees are and all that. And again, homeowners associations, some of them, I haven't seen it so bad in this state, but some of them have reputations as being super difficult and making the property less desirable. And maybe it's due to just the politics of a few key individuals, and maybe it's a transitory thing, but some neighborhoods have reputations, good ones or bad ones, so something to think about. Appraisal. Problem with appraisals is the appraiser knows what the offer price is, so he's kind of biased. It's people are always, when they're in the purchase program, they're reassured where the house appraised for what you paid for it. That's not by accident. All things being equal, unless there's something really dramatically wrong with the home, the appraisal is going to come in at the correct price. The way they do the appraisal is they look at comparable sales of like homes that have sold in the area, and they use that as justification to establish the price. I like to buy raw land where the appraisals are impossible to do because there's not, nobody else is buying 338 acre parcels, and there's just so many variables involved. So the appraisals are pretty much worthless because there's no comparable sales where they can establish prices. But if you're living in some sort of subdivision where there's a fair amount of volume, it's pretty easy to establish a fairly accurate appraisal. But anyway. Then the inspections. This can be gamed a little bit. Anymore, especially, in light of the earthquakes and things up here, I want a structural engineer. You get some of these home inspectors, they'll come in and they'll look for little minor code violations, the proximity of the outlets and the size of the egress on the windows and things like that, all of which are important, but there's a lot more to it. Is the structure sound? The structure hasn't been damaged by an earthquake. It's very difficult to obtain earthquake insurance and even harder to file a claim. So if you've got some sort of structural damage that doesn't show up, and it could have been caused, by earthquakes that happened, 5 years ago or so, whenever the bigger one was, you want to know about that beforehand. And then the things like the egress and windows and all that stuff, the code violations, you want to know about that as well, because when you go to sell it, that new buyer is going to have a home inspection. If they find something that's out of compliance, all of a sudden you're stuck with the bills. If it's you as the buyer, I did this with a home I was buying. I got about $10,000 off the purchase price because there were some fairly minor things, semi-minor things that I could fix, and I could fix them over the course of my ownership, and I did, and saved a amount of money. I mean, things like railings. If I don't know what size it is, like if a softball, something about that size can fit through it. They envisioned that a child's head could fit through the railing, and a child could fall. So that's going to be a code violation. The railings were like that in the home, so I added more slats, in the course of a couple of years, and that was fine. The egress windows in some of the bedrooms were not big enough to allow a fireman with all his kit on to get through the window, so those would need to be changed. That's a little more involved. You have to actually change out the window, but again, you get that taken off on the price. But you can get, depending on your real estate person, you have a buyer that was so nervous about everything, was on the fence. Well, you want one of these softball inspectors who just kind of goes through, takes their fee, writes up a bunch of minor stuff. And then you had these other inspectors who were like so over the top and made it look like every house was absolutely a disaster. They were very meticulous to the point of being anal about it. And anyway, so depending on the person, the buyer I had, would depend on the inspector I would get, which is kind of wrong. Anyway, I prefer somebody who's a structural engineer, can look at the structure, catch the big stuff, and then the smaller details as well, but not be overly focused on things that are easily fixed. Loan approval, yeah. You want to make sure that it's all good to go. Title search is done. They'll give you all those documents a couple, 3 days ahead of time. If they don't, well, they haven't complied with the law. And two, your closing is going to be just a joke, because they're just going to throw stack after stack of documents in front of you, and you're not going to have time to review them. You should review them beforehand. So, final walkthrough, before you paid the prices. And sometimes there's things that will come up in the home inspection that need to be fixed, and they'll drag their feet and maybe not fix them, knowing that if the thing closes and those things are still outstanding, now it's your problem, not theirs. So make sure that's done. And then the closing. Hopefully should be not very dramatic. Just go to the title office generally, and they just shove papers in front of you and you sign them, and there should be papers that you're all familiar with, that you've already seen. And that was that for a real estate process. So once you've done it, it's far easier to buy the second home and the third home, whatever it is, and kind of go up the ladder. Maybe turn your previous homes into rental properties. Again, that's why you want to buy in a good neighborhood that's going to stay nice. So term project, we talked a lot about it. Get that put together. If you're still struggling, do something. The score will go to a 0. Don't say, "Oh, I'm doing great in the course. I think I'll get an A without it." You will not. The score that will be entered will be a 0. So obviously 50% is failing. Zero is going to leave a mark. If you don't do the term project, your letter grade will be down by typically a full letter grade at least. So just turn in something of length and hopefully make it something that's useful to you. If it looks like it's useful to you, if it looks like it's tailored to you, that's the criteria that I will assess to give you full credit or not. the review video. I'm going to get that posted. Obviously, after Thanksgiving, we'll all take Thanksgiving off and then come back and we'll do the final. It'll be on Blackboard. And that'll be that. So, hope you've learned something. Hopefully, I've encouraged you to get out there and start saving and investing and get ahead and be able to enjoy your life due to having your personal finances squared away. Good luck.